Last 90 days have been different in real estate and student housing. In this context, let us share our experience and perspective so that it can be helpful to your business. Well, as a research firm, we are usually among the first ones that notice any change of market mood or market cycle as people come to us for information, trying to source a bit more of what's going on, preparing the strategies, or buying data for future transactions and opportunities. In Q3, we had about 20-30% more business. We saw more inquiries for subscription, for strategies, for reports and data, and as well as some supportive objective data for transactions. And then since summer, we see more reasonable inflation levels. We see different interest rates. We see also some election results around and after Expo. Things have been rather more forward-looking. People are much more open, and let's say altogether 90 days, we have seen more capital and more opportunities looking into real estate and especially student housing. It is not necessarily translating into more transactions yet. We much more see rather sort of preparing for more transactions, and the transactions rather happening and new investments happening in 2025. But we certainly see change of mood and sort of approach towards new transaction or investment opportunities. In this context, student housing and rented living sectors have noticed probably higher demand of capital and sort of investors. What we are hearing is that, let's say, office, retail, hotel are not as investable as student housing for various reasons, and actually student housing has become one of the most investable asset classes among all. This has recently been confirmed by various rankings and sort of researches, and when we take into consideration the sizable asset classes where, let's say, bigger volume of capital can be invested, student housing actually is number one investable asset class in real estate. Indeed, we can see a lot of articles, research papers, brokers, agents confirming the same, that there is a new and sizable amount of capital ready to be deployed in student housing because of the parameters that are better in this asset class than the other ones, the mainstream ones. This can be also confirmed with our own experience. Last 90 days, when compared to the year-to-date period, we have probably 50% more inquiries for subscriptions, reports, or data for transactions. So it is obvious that the investment mood or market mood has changed significantly in real estate and towards student housing. So why is it that student housing does notice such an increased investment interest? So one of the main reasons is that student rents in private PBSA increase above inflation, while occupancy stays same, let's say 95-98% high. So when we look at the last years, the student rents really beat the inflation and able to be in positive numbers. Also, even though rents increase above inflation, they don't increase as much as the disposable income of those who pay for it, so parents is increasing. So rents have certain room to grow to match the increase of disposable income of parents. So when we look at the last 70 years, after any downturn in economics or society, more people go to study. And so it happened after COVID. So not only rents increased, but the occupancy stays same or increased. And that's a situation that other asset classes might not necessarily experience. On top of that, what we see in recent years is that the student demand, mostly from international students, out of which all of them need a bed. When they study abroad, they usually opt for several, let's say, top 20 destinations, and Europe has become one of the most preferable destinations, mostly because of the happenings in other destinations like US, Canada, UK, and Australia, who are the four heavyweights, or let's say education superpowers, and they put some restrictions on international students, and therefore families and their children are looking to study in other countries that are not so limited or regulated, and therefore Europe as a destination with many English taught programs is experiencing a rather rapid growth of international students, and that's actually based on the regulations in other countries anticipated to go on next 5 to 10 years. Higher occupancies or continuously high occupancies are also a cause of a higher adoption of residential type of student accommodation. So with more time, the residential type of student accommodation is more preferable lifestyle choice of the students. But on top of that, also after COVID, it matters that this type of accommodation provides better health and safety opportunity than the flat sharing or HMOs and private rental market. So increased popularity by health and safety as well as by lifestyle choice of residential student accommodation is behind the increased or still high occupancies in this sector. Student housing is a relatively young asset class, is experiencing yields to be rather expanded with certain delta to more mature asset classes. Therefore, it offers relatively good opportunity for yields compression in years to come, and the likelihood this to happen is relatively high as we see such a wall of capital coming to the market and investment interest with limited opportunities in let's say younger or smaller asset class. So with higher NOI and now compressing yields over the years, there is a relatively positive investment environment in this asset class. Transaction-wise, pre-September 22, we used to have about 85 to 90 transactions a year in student housing sector in general. Of course, that number decreased in let's say Q4 22, 23, and 24 so far. But that number of transactions expected to be at par with the previous levels, if not increase it. Only now we have about 12 to 17 transactions being contemplated by the market, and the 10 billion euro threshold of transactions that we were experiencing previously is probably going to be achieved, not only because of the attractiveness of the asset class, but also stuck up demand from previous years. There are about 418 portfolios of student housing, and we expect that, let's say, about 5%, maybe slightly more of the portfolios will be recapped or transacted, and therefore we expect that the volumes might be quite sizable. Moreover, we have about 1,000 assets of student housing coming to the market in the next 3 years of a cumulative investment volume of 27 billion euro. That also represent opportunity for investors who are able to take a bit more risk in a new development stock. So all in all, it seems like student housing is a very good position to be a good investment asset class in 2025 and onwards, thanks to all the factors that have been mentioned, like increasing rents, about inflation, occupancies, yield compression, etc. And I believe that all these insights and data is somehow helpful to you and to your business. We would be pleased to help you more. If you have a transaction shaping up, we can help with underwritings, rents, occupancies, OPEX benchmarks, CAPEX, etc. These are the exercises and data that we use to help on an objective level as a data supplier. If you are into sort of investing or having an insight across Europe, have a subscription to our platform that enables access to 255 cities and 14,000 assets, so you would have a great insight to the market, rents and other KPIs. And if you want to be on a pulse of what's going on in student housing, you can subscribe on a complimentary access to our market monitor, and you will be receiving daily news on all the transactions, changes, applications, refusals, and what's going on in student housing. So I hope this is useful. Find more on our website or contact our team with the contact details provided herein. Thank you.